gold prices remained confined within a familiar weekly trading range on Tuesday as traders closely monitored ongoing diplomatic negotiations between the United States and Iran. The precious metal has struggled to break decisively above recent resistance levels, while geopolitical uncertainty continues to provide underlying support. Spot gold traded in a narrow band near $2,350 per ounce, reflecting a cautious market awaiting clearer signals from the US-Iran talks. Traders are assessing the potential for a new nuclear agreement, which could ease Middle Eastern tensions and reduce safe haven demand for gold. Conversely, any breakdown in negotiations could trigger a flight to safety, pushing prices higher. The current range, roughly between $2,320 and $2,380, has held for over a week, with both buyers and sellers hesitant to commit. Analysts note that gold's inability to break higher suggests that bullish momentum is waning, but the downside remains protected by geopolitical risk premiums. The US-Iran nuclear talks, which resumed in Vienna, are a key variable for gold markets. A successful deal could lead to a reduction in sanctions on Iranian oil exports. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Potentially lowering energy prices and inflation expectations, both of which are negative for gold. However, the path to an agreement remains fraught with obstacles, and any perceived setback could quickly reignite safe haven buying. A senior commodities strategist said, "Gold is in a wait-and-see mode. The market is pricing in a 50-50 chance of a deal, and until we get clarity, gold will likely remain range-bound." The current price behavior of gold reflects the market's uncertainty about the outcome of the negotiations. Traders are not willing to take large positions without clearer signals from the talks. This cautious stance is evident in the lack of decisive price movement, either up or down. The $2,350 level has become a psychological benchmark, and any sustained move above or below that level could signal a shift in market sentiment. The geopolitical risk premium embedded in gold's price is a function of global uncertainty, and as long as the US-Iran talks remain unresolved, that premium is likely to persist. The market is essentially hedging against both outcomes, a successful deal and a failed one. If the talks result in a new nuclear agreement, the reduction in geopolitical risk could lead to a sell-off in gold. On the other hand, if the negotiations fail, or if tensions in the Middle East escalate, gold could see renewed buying interest. Gold's position within its trading range suggests that the market is not leaning strongly in either direction. This balance between bullish and bearish forces is a sign of market indecision, which is often a precursor to a breakout. The next signal to watch is most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Whether the US-Iran talks produce a concrete outcome. If a deal is announced, gold could face downward pressure as investors shift toward risk-on assets. If the talks fail, or if new tensions emerge, gold could see a sharp upward move as investors seek safe haven assets. Until then, gold is likely to remain in a holding pattern, with price movements dictated by incremental developments in the negotiations and broader geopolitical events. The market is waiting for clarity, and until that clarity emerges, gold will likely remain confined within its current range.